Okay, we are live. Good evening, everyone. This is Aissatou Diallo from Homes NYC. I'm excited to have Frankie Vozi from Jet Direct today with us. We're going to talk about how to qualify for a mortgage. So, Mr. Barry, going to join us soon, too. I don't know. I'm going to give you the word. You're going to tell us who you are and then how long you've been doing this and take it over, Frankie.
Sure. Hey everyone. My name is Frankie. I'm from Jet Direct Mortgage. I'm a mortgage loan officer that has been in the business since 2005. So I've been doing this for a very long time. I work exclusively with Homes NYC and work with their community very, very closely in helping them purchase homes, single family homes, multifamily homes, homes in New York City, homes in Long Island, homes all over New York State. So I'm here to help you with all your needs and any questions you have to get the ball rolling for you guys.
Great, thank you for that. And now we're gonna start with the basic. I just want to know what's the mortgage, and then what type of mortgage do you have?
Sure. So a mortgage is a loan to be able to purchase a property, to purchase a home. So you could purchase a home to live in, you could purchase a home to rent out, but you would need to have a mortgage loan to be able to purchase a house unless you were going to be to purchase the house all in cash. Now, not too many people have hundreds of thousands of dollars laying around to go purchase a home in cash, so they go and get a mortgage against the property. A mortgage is going to require you to put a down payment. We have many different mortgage options, some with very low down payments, some with higher down payments. It really all depends on the type of loan that you qualify for and what your financial profile looks like.
That's what I was about to ask you. How many mortgages exist, like um,
Sure. So there's
traditional?
many different mortgages. There's FHA mortgages, which is a government loan, which requires a very low down payment. You could purchase a house with as low as 3.5% down payment. So that
And
means 3.5% of the purchase price is what you would need to put as your down payment. And then there's conventional mortgages where you could put anywhere from 5% down to 20 to 25% down, depending on how many family home the house is.
then conventional loan can go a little down than 5%.
Conventional can go a little bit down than 5%, depending on the type of property you're going to buy and the location of the property. So conventional loans have some down payment assistant loans where you could put as low as a 3% down payment, but it really depends on where you're purchasing the house. And then we can look to see where you're buying it and if you fall into that low down payment.
Okay. And after FHA and conventional, what else do you have? Like,
So we also have non-conventional type mortgages. Okay, the regular FHA and conventional type mortgages are going to require a full income check. We're going to look at your tax returns, your W-2s, your pay stubs, and we're going to qualify you off of your income. A non-conventional mortgage is more or less a no income check. So we're not going to be looking at your tax returns. We're not going to be looking at your pay stubs or your W-2s. There's no income requirement.
and what that's the VA loan, or is just what's the name of that non-conventional loan? Or
It's just called a non-QM loan.
oh, okay, got it. So is this part of like a VA loan as well for veterans?
So VA loan is a type of FHA mortgage. We also
Okay.
offer VA loans.
Mhm.
VA loans is a loan for a veteran who can who could buy a house with no down payment, zero down payment. The VA loan is the only type of mortgage where you can get a mortgage loan with no down payment. So it's a really good loan for the veterans that serve the country for us.
And what I heard about UFDA. I don't have a lot of idea on that.
Sure. So we also offer USDA loans.
Hmm.
USDA loans are for rural areas. So it's going to be nowhere here in New York City or Long Island. It's going to be uh, in an area where your neighbor may be 10, 15 miles away from you, but we do offer them.
Okay, great. So that's a good thing to know. So let me know how, an FHA loan, how to get qualified for the FHA. I understand you said that you're gonna be qualified from your income, and then I know there's the credit they're gonna check. So what are the requirement? Like how much income do you need to have, and then like your credits, like what's the minimum credit you can have to get an FHA loan?
Sure. So the minimum credit to get an FHA loan is going to be 600. So you would need at least a 600 credit score to qualify for an FHA loan. Okay. If you don't think that your credit is quite there yet, we also help with credit repair options to help you get your credit to where it needs to be to qualify for the FHA loan. So we look at the credit, which needs to be 600, and we look at your income. So whether you're self-employed or you work for a company and you get a W-2, FHA is going to look at your 2 most recent years of income. And we're going to take your 2 most recent years of income and qualify you off of that to let you know what loan amount you qualify for.
What about if somebody worked like 2021, 2020 and 2021? Let's say they worked 100K on 2021, 2020 they worked 20,000. So how do you qualify them? Because it's like a big gap between those two on an
Yeah, so if you're talking about somebody that is self-employed and in 2020, let's say they made 20,000, and
Mhm.
2021 they made 100,000, what we're going to do is we're going to average that income. We're going to average the 100,000 and we're going to average the $20,000, and that's going to be your income that we're going to
How do you do
qualify you
that?
for.
You put them
Sure.
together and divide?
Exactly. So we combine it. So we combine 100,000 plus the 20,000 and you divide it by 2. So we would be able to give you credit for $60,000 in income.
Okay, great. That's good to know because a lot of people like telling us in 2020 they didn't make a lot of money because of the pandemic, and then
Sure.
2021 they have the income, so they want to know. Okay, I didn't work well on 2020 and 2021. It's good to know that it is the average of those two. That's great.
Yeah.
So, do
The
you
the
have
good the
anything
good
else?
thing is the good thing is with that is now that we're in 2023, we're going
Mm-hmm.
to be able to disregard the
2020.
small income for 2020.
Yeah.
So I know most people did not work that much, if at all, in
Mhm.
2020 because of the pandemic. So it was hurting a lot of people from buying homes last year because of the no income that was made. But now that we're in 2023, we're going to be able to look at your 2021 income and your 2022 income.
And then, do you have anything else to add on the FHA loan? Like, do you have anything? We talk about credit and income. So, anything else you want to add on that?
No, again, so it's really the credit, the income, and the down payment. So
Okay.
we have 2 types of FHA loans. We have an FHA loan where you could put
You're breaking down. Okay, Frankie just left
Am I
us.
here?
Yeah, you're here now.
Okay, sorry. So we have an FHA loan where you could put 3.5% of a down payment. So let's say you were buying the house for $500,000. 3.5% is $17,500. So that would be your down payment on the house. That's the amount of money that you would need to buy that house. We also have an FHA loan where you could put as low as 1% of a down payment. So if you were buying a house for $500,000, you would only need $5,000 to buy that house. So
Wow.
again, there's many different mortgage options that we have. You don't need a great credit score. You don't need a big down payment. It really depends on your financial situation. And that's where we all come into play, where we can request the documents that we need so that we can analyze your situation and let you know what you qualify for. Because
And
you
about that
may
one,
qualify for a house and not even know it.
yeah. And then about that 1%, is it the same requirement as the 3.5%?
So it's the same requirement. It's just that the interest rate is going to be a little bit higher,
Okay, like how much? Because people need to know.
about a 0.5% higher than normal.
So it's so worth it, right?
Exactly.
Okay, great. So, well, let's move on to the conventional loan you was talking about. So,
Yep,
what are the requirement of conventional loan and
sure. So for a conventional loan,
mhm,
there's two different requirements. And that's going to change if you're buying a one family house or if you're going
mhm,
to be buying a multi-family house. Okay? For conventional, if you're buying a one family house, you could put as low as 3 to 5% of a down payment. And we're not going to have to look at your 2 years tax returns, only your most recent year's tax returns. So
one
unlike
year?
FHA, where you have to average the income, with conventional, as long as you qualify for the 1 year tax return, we're only going to look at your most recent year's tax return and disregard any income you made previously. That's for a
Wow,
one family house. Yep.
that's
If you're
great.
That's great. We do that a lot. We work with that type of program a lot.
And that's
Now,
55% down.
absolutely. But
Okay.
now, if you're going to buy a multi-family house, a 2 unit house or a 3 unit house, and you want a conventional loan, you would have to put at least 20% down to be able to go off of a 1 year tax return or to get any conventional loan at all. So the difference between conventional and FHA for multi-family homes is that you have to put a much bigger down payment on a
For a
conventional loan
multi-family. Okay.
on a multifamily.
If I understood, like if you are buying one family, you can go low as 3 to 5% down on the conventional loan, and then if
Yes,
you're buying two, three, and up multi-family houses, you gotta put 20% on a conventional loan. But if you are taking an FHA loan, you can put as low as 3.5, right?
correct. Absolutely right.
Great. And then what about the credit on this conventional loan? What are the requirements?
Sure. So on a conventional loan, it's going to be they're a little bit tougher with the credit requirements.
Okay.
You are going to need somewhere around a 680 to 700 credit score to qualify for a conventional loan.
Okay. And then the history of the credit matters, like
Yeah.
how long you've been taking. Some people can have a credit for 1 year. Is that matter, or it has to be a long time?
No, it doesn't have to be a long time. I mean, I would say at least a year they'd want to see. And if you don't have credit for at least 1 year, that's okay. We would just have to show that you have other types of bills in your name that you pay. That could be your rent, it could be a utility bill, it could be a gym membership, insurance for your car, just some kind of alternate trade line that you have that you pay. So again, we're also credit experts over here, so we could really help you and point you in the
Mhm.
right direction to help get your credit where it needs to be if it's not quite there yet.
And then out of all that, can you be qualified from a guarantor can help you get qualified for all those type of loan, the FHA and
Yes,
conventional?
yes. So if you don't qualify on your own and you need a little extra boost of income, you can have a cosigner help you qualify for the mortgage. Now, if it's an FHA loan that you need a cosigner on, that cosigner must be a family member of yours. It could be any type of family member besides a cousin. It could be your brother, your sister, your mom, your dad, your grandparent, an aunt, an uncle, a stepbrother, stepsister, any type of family member beside your cousin. I don't know
Okay,
why, but that's FHA's rule. If
okay,
you
that's
need a
FHA.
exactly. If you need a cosigner for a conventional loan, it could be anyone. It could be your friend. It doesn't matter.
Okay, that's great. That's great. And also, I know that some people want to buy a couple, and then if they don't make the income, they have their kids. So how many, like up to how many people we can combine those incomes?
There's really no limit. There's really no limit. I mean, we've closed loans in the past where there was up to 6 people on the application.
Wow,
Yeah.
That's a great news. I didn't know that. I was like,
Yeah.
before.
Nope. Nope.
Okay, there's no limit. So that's a great news for the community as well.
Yep.
So, well, do you have anything to add on the conventional loan? Like we have touched on one family, two family, we have touched on credit and the down payment as well. So, do you have anything else to add?
Not really. I think we pretty much hit all the spots. We went, like you said, we went over the credit score, where you need to have a little bit higher of a credit score for conventional, somewhere around 680 to 700. Your down payment is slightly higher on a single family house for conventional. You need to be around 5% of a down payment, possibly as low as 3%, depending on the situation. And for a multifamily house, your down payment is much different than FHA, where on FHA you can put 3.5% down, but on conventional you need to put 20% down.
And
Another thing I'll touch on, actually, now that I'm thinking about it, is that the down payment for these loans, FHA or conventional, does not have to come directly from you. So if you have a family member that's willing to help you with a down payment, they can give you a gift. So this doesn't have to be all your money. If you have family
wow,
members that are willing to help you buy a house and they want to give you some money, they want to give you a gift, you can get a gift from a family member.
wow. So, and that gift can be a cash or transfer, or it has to be like
So,
something, a
right.
check.
So no cash. This family member
Mm.
would have to give you a check from their bank account to yours.
Wow, that's great. That's a great news for people to know that
Yep.
if you don't have the money, you can have a gift, you know.
That's it. Yeah. Tax
And also,
refund. Tax season's coming around. You can use your
uh,
tax refund money.
yeah, that's still true. And also, I want to know, there like, can you say FHA is better than conventional, or conventional is better than the other one, or is just like in your situation, which one is fit you best?
Exactly. It's your situation, whichever one fits you best.
Oh, okay,
They,
that's
they
great.
they all each loan has their pros and cons. It's whatever loan works for you the best, and we'll analyze that. We're not
Mhm.
gonna just come to us and say you're getting FHA and you're getting conventional. We're gonna go over the pros and cons for your situation on if FHA or conventional is gonna be better for you.
Okay, that's great. Right, so I know we have talked about FHA and conventional and the other type of loan that is non-conventional. Can you touch on that one as well?
Sure. So non-conventional loans are always going to require a high down payment. So the down payments on the non-conventional loans are going to be anywhere from 20 to 25% down. With the non-conventional loans, there's two ways to really qualify you for this type of loan. It's
Mhm.
mainly for self-employed borrowers who don't show a lot of income on their tax returns, but they make a lot of money and a lot of deposits, incoming money from their business into their bank accounts. And what we do is we're going to ask them for their last 1 year's worth of bank statements, and we're going to look at the deposits that they make on a monthly basis, and we're going to use that as the income to qualify you for the mortgage. That's one way. Another way is we're not going to look at the bank statements, and all we're going to need is a letter from your accountant, and they're going to tell us how much income you make. That letter is going to go only to us. It doesn't go to the IRS. It doesn't have to be audited. It's just a letter from your accountant to the lender stating how much money you make, and that's the income we're going to use to qualify you for the loan.
Wow, that's great to know. And then is this loan can be as a primary resident?
Yes, so that's for a primary residence. We also offer no income loans for investors who want to buy an investment property.
Okay, that's great to know. So the non-conventional is 20 to 25 for self-employed that doesn't show a lot of money. So you can just check on the 12-month bank statement to get them qualified. Am I correct?
Correct.
And the other type is like just a letter from your accountant, just writing down how much you make a year. Then you as a loan officer, you can qualify them from that letter.
Correct.
Yeah, that's great to know. Well, and also, what about the investment part?
Sure. So the investment part is going to be similar to the primary, where you have to put pretty big down payment. Again, 20 to 25%. And we're not going to ask for a letter from the accountant. We're not going to ask for your bank statements. We're going to qualify you off of the income that's going to come in from the property. So as long as the rental income from the property is more than what your mortgage payment, your monthly payment is going to be, you'll qualify for that loan.
Wow, that's great. So it's
Great.
just like based on the income from the property, right?
Correct.
As long as you have the down payment, if you have a lot of money, so you want to invest in a property, you don't show a lot of income on your tax return, you know that you can buy a house. Just they're gonna just check the rental income from that property. That's a great news. Wow.
Correct. Yeah.
Right. And also, all of these loans, I just want to know: is there some of them that cannot be a primary resident, or what we discussed on the conventional and FHA? All of them are primary resident.
Sure, exactly. So FHA is only for your primary residence. You cannot get an FHA loan for a house that you're not going to live in. Also, on the conventional loan, with the 5% down payment, you cannot buy a house with a 5% down payment for conventional where you're not going to live in the house. It's only for primary residents.
Okay. And also, if you live in that house for 1 year or 2 years, can you like move out and be not your primary resident anymore? Or?
Yes. Yes.
Okay,
You
so
can.
how does that work? And if you buy a house as a primary resident, you just required to live there for how many years for you to be like out of that?
1 year.
Yeah, that so that's great to know.
Yep.
All right, so anything you have to add on?
I don't think so. I think we pretty much
before he
covered everything.
Mr. Barry,
sorry
you
for
are
interrupting.
Mr. Barry, we can't hear you.
Can you guys hear me?
You are still.
It's not good, right?
Yeah, now it's good. You're back.
Okay. Before I go into the questions, I just want to let everybody know that Frankie here, we've been doing business with him for over 10 years. It's a lot of blessing, and he have helped our community a lot. And the only thing we mad about Frankie right now, he don't know how to say Jaram. He know how to say pronounce the names and all that good stuff, but he don't know how to say Jaram. So that's another thing.
Okay,
but anyway, we are really grateful with you, Frankie.
Thank you.
Yes, and thank God. I was telling someone the other day, out of all these files we did for the past 10 years, not a single person lost their house. So we make sure we do it right and everything is good. That is a big plus. Now, before we go to the I had questions, but the audience is writing to us. They're asking you questions. I want us to go straight to them and acknowledge them.
Sure, no problem.
Debate with them. First of all,
can I ask you something before we go through the question from the audience?
Okay, I thought we can do mix and match. Okay, go ahead.
Because there's something like Frankie, some people, they are so afraid of applying because they think they are not qualified. What's the main point people need to know to like, okay, if I have this monthly payment and I have this type of money, I can qualify? Because we have like our base was which one? There's one member of our team that didn't know he can qualify for a mortgage and then was paying high rent. And then when Tabari contacted him and told him, look, with your income and this, you can qualify for a mortgage. So people really think that's a big deal to be qualified for a mortgage. What can you tell those people?
It's true. And honestly, what can I tell those people? I really tell those people that you honestly never know. The amount of money you need for a down payment for an FHA loan of anywhere from 1% to 3.5% of the purchase price. If you look at it, it comes out to probably the same thing if you're going to go rent a brand new apartment and have to put the first month's rent, the broker fee, security deposit. It comes out to the same thing. So you honestly never, ever know. We need to review all of your paperwork. And point you in the right direction. If you don't qualify for a mortgage at this moment, we're not just going to say, hey guys, we're sorry, you don't qualify, and forget about you. We're going to point you in the right direction, and we're going to help you, and we're going to tell you what you need to do to qualify for a mortgage. Because nowadays, with the rental being so high, your mortgage payment could be the same as what you're paying for rent. And if you're buying a multifamily house, now you're the landlord. You're going to be the one collecting the rent from the second unit. Right now, rent in New York City is $3,000 a month, sometimes higher than that. So it's very, very possible for you to qualify for a mortgage. You don't even know it. If you have a job and you have some money in the bank, I'm not talking about tens and 20, 30, 40, $50,000, some money in the bank and a job, and you think you have decent credit, doesn't have to be the best, give us a call. Let us take a look at it. And if you don't have good credit, give us a call anyway, and we'll point you in the right direction on how to fix your credit, or give you pointers on where to go to be able to qualify for the mortgage. There's so many different options out there. It's not how it used to be, where you have to put a huge down payment, have to have a high income, have to have the best credit score. There's so many different options that we just spoke about where it's very possible that you'll qualify for one.
Okay, thank you so much. I have that in mind. So thank you so much for that. So I'm going to give it back to Mr. Barry. So let's go, Mr. Barry.
Yeah, thank you very much. I'm just going to go back to the audience. Let's acknowledge the people who are watching us, who are asking questions. First of all, you have Nene Abbas saying, Diallo saying, thank you. He's proud of you. He's proud of us. Thank you very much. We appreciate that. Then you have Mr. Barry here. Baba Gal Barry, hold on.
Baba Gal Barry.
Yep. There you go. That's one of your clients, I believe. That's one of your clients. What am I having? Can you guys see my? Okay, I'm sorry. I'm trying to get this thing up.
Okay, I help
you.
I
don't know. My connection is going in and out. So go to next to Baba Gal Barry. Yes.
Baba Gala said, thank you for this great information.
Great information. By the way, Frankie, yeah, you have Baba Gala is coming for his investment property. Okay, you helped him a while back, but thank God he's so comfortable today. He's looking for it. Yes, long time ago. So he's looking for investment property. Let's move to the next one. And thank you, Sidi Sal, for the hearts. And yeah, thank you too. Thank you for watching. And we invite everybody to share this information because the information is for free. Please share it with your friends, family, so they can understand exactly how to go by this. So here is a question for you, Mr. Al Hassan Kanu, my good friend. He's actually watching us from LinkedIn. So go ahead. Yeah, you can read that question. Can you see it, Frankie?
Yep. So the question is, does the family member have to live in the same state or can they live anywhere? So the family member could live anywhere. The family member could live in any state. They can also own a house of their own. As long as their income and their debts and their debt-to-income ratio and credit help you to qualify for a home, we can use them. It doesn't matter where they live.
Okay. So there you get your answer to your question, Mr. Al. If you have more you want to ask, you can just type in the comment. So that's the follow-up of the question for the FHA loan. The question he asked was for FHA, by the way.
Yep. So that's for FHA and conventional. It does not matter where the cosigner lives.
Okay. Great.
Next, Nene Abbas Jallo said, can someone put a 401k money for down payment?
Yes, so you can. So you could use your 401k money for the down payment. And actually, this is a really good question. It's probably very, very smart to be able to use your 401k money for a down payment if you have it, because using your 401k money to purchase a house, they allow you to take that money out without having to pay all of the penalties for it if you withdraw from your 401k early. So if you withdraw from a 401k early and it's not for purchasing a home, there's many penalties you have to pay. But if you use your 401k money to purchase a house, that goes away. So that's a really good question.
Oh, great.
Okay, so we move into the next alphabet. Go ahead, Frankie.
It's possible for me to get a house in Virginia, which I am a U.S. citizen, but I don't stay in the U.S. So it's possible for you to purchase a house if you're not living in the U.S. Yes, I mean you'd be purchasing that home as an investment property, I assume, if you're not going to be living in it. So yes, you don't have to live in the state you're purchasing a house in if you're going to be using it as a rental property. It's also
And
possible to purchase a house as a vacation home. So it may be a house that you come and visit a few times a year, or you stay out there a couple months out of the year. It doesn't have to be your primary, and it doesn't have to be an investment property. It could be your second home or a vacation home, we call it.
that vacation loan home is like it
That's
has the
it.
same requirement as the primary.
It has a similar requirement as a primary conventional loan. You could only
Okay.
take that type of loan with a conventional mortgage.
And also, why he's saying he's a U.S. citizen and then he was trying to buy a house. What about if you're not a U.S. citizen, you don't live in the U.S.? Is there any option for those people as well?
There are options for those people, and it's a very, very large down payment you would have to give, probably somewhere around 40 to 50% of the purchase price.
Okay, 40 to 50%, and then you don't check anything. It's just that down payment,
Correct.
and that has to be a vacational or investment. Oh,
Well, I mean, it depends on what their intentions are. So
okay,
we have it for both types.
okay, great. That's good
Yep.
to know. All right, let's move on. He asked another question again. He says, "Is it possible for me to get a house in Virginia?"
Yeah,
Oh, it's the same
that's the same
question.
one. Yeah.
Yeah.
You
Okay.
know,
Let's
you
move
have
to
a
the next.
last one. Yeah.
So if you have a cosigner, can you remove him from the loan later? So yes, it's possible to remove your cosigner from the loan later on, but in order for you to do that, you would have to refinance the mortgage under your name. So right now, if you're using a cosigner, it's because you don't qualify for the mortgage on your own. So you need to take that family member to help you purchase the house. So now if you want to remove this cosigner a year or 2 years from now, you would have to refinance. And in order to refinance, at that point, you would have to qualify for the mortgage on your own so that you can take the loan under your name and remove the cosigner.
I have a question, a follow-up question on that. Let's say we're talking about a multi-family, like a three-family, right?
Mm-hmm.
And the house has equity, let's say over 30 to 40, let's say 40% equity on the house.
Mm-hmm.
If you want to remove that person, do you need 2 years tax return or 1 year tax return can do it?
On a refinance?
On a refinance, yes.
Then you can go off of just a 1 year tax return.
1 year tax return. Does it has to be? What about if the house can pay for itself? Let's say the house can pay for the two apartment, because it's three family. Let's say two apartment will cover the mortgage. You still have to show income.
I mean, it depends on the other debts that you may have. You may have a car loan or credit cards or student loans, so those have to get factored in. So more than likely,
Okay.
you still would have to show income.
Okay.
But
Somewhat income, right?
exactly. And actually, I have a
Okay.
follow-up to that as well. So if someone co-sign, a lot of people may be hesitant to co-sign for you because they think it may hurt their chances of getting a house on their own if they don't already own a house.
Yeah, I
That's
have those
that's
questions.
that's false. Someone co-signing for you will not hurt their own chances of purchasing their own home. What we would need to do is prove that you are making the payments out of your own bank account every single month for the last 12 months. As long as we could prove that you are the one making the mortgage payment from your account for 1 full year, we do not have to count your mortgage against your cosigner. So it will not hurt them from purchasing a house on their own.
Okay, that's great. All right, let's see the next question. He said, I would like to have your contact for more discussion. Okay. So there is contact running down here. And also, if you need Frankie contact, he can give it to you, or you can call one of us. We can gladly send you a text message of his contact.
Absolutely. And for anyone, if they have a pen and paper right now, I'll give you my cell phone number, and just mention that we connected through the stream, so we could all work as a team together with Homes NYC. But my cell phone number is 516-852-2412. That's 516-852-2412. You can call me or text me anytime.
Okay, that's great. Well, we have all the question answered, and I don't know if anyone have more question for Frankie. Otherwise, you have touched everything. So thank you so much for being here. And yeah, Mr.
Yep.
Barry, just put your number here.
Amazing.
So this is Frankie. He know the community ins and out. And then also, Frankie, I want you to give us a scenario, because a lot of people like ask me that. A scenario of somebody that is buying a 500K house, and
Yep.
the tax return is around, no, I mean, the taxes of the house is around $5,000. So how much they should show on their income, and then also what are the down payment on this, like just an example so people can visualize what they can get into.
Sure. So let me give you an example. So if someone was to purchase a $500,000 house using the FHA loan, where the taxes are $5,000 a year, you would need to have an income of roughly $110,000. $105,000 to $110,000 in income to qualify for a $500,000 house using the FHA loan. Now that income could be your income alone, could be you and your spouse, you and a co-signer. You just need to have a combined income of anywhere from $105,000 to $110,000.
Okay, so that means you can add up like up to there's no limit, you said. Anyway, you said that
there's no limit.
You can add up a lot of income to make that 110,000, so you can qualify for this FHA loan. What about the conventional? Is this the same?
It's going to be very similar, yeah.
Okay, that's great. All right, so there is another question that just came up. Let me show that question. All right. She said, Bintaba, she said, I have a student loan for my 3 kids. Does that affect their qualification?
Yeah, so it's part of your debt to income ratio. I mean, everyone has debt for the most part. People are going to have credit card loans, personal loans, car leases, student loans. It's not going to negate you from getting a mortgage. It's just going to be part of your debt to income ratio equation. So having a student loan is no problem.
So how do you say that? Like if they make more income than the loan, that's what you say? Like,
yeah, it's really it's like a calculation that has to get made from all the debt versus your income versus the mortgage payment. So that's why it's best if we look at everything together, the credit, the income, the bank statements, and then we could verify everything together for you.
So that means even though you have a student loan or you have the student loan from your kids, doesn't mean you can qualify. Frankie need to check on you need to check all these documents to see if you're qualified or not. If you are not right now, he can point you to the right direction to get it fixed. Right?
Correct.
Okay. So there is another one. Thank you so much for that answer.
You're welcome.
All right, Baba Gale just said your old client. Hey, Frankie, I want to thank. Oh, okay. He said he wants to take this opportunity to say thank you and the team for helping to change his life.
Oh. Thank you. You're welcome, Baba Gali. Of course, I remember you.
Am I frozen?
Nope, you're back.
Okay, all right,
You're
good.
back. You're back. You can hear you back.
All right, so
Yeah.
Mr. Barry, do you have anything to add in? Frankie give us all these great teas, and thank you so much, Frankie. We really appreciate your
You're
time.
welcome.
Mr.
You're
Barry, want
welcome.
to add something? And then thank you for serving this community. You have helped a lot of people. All, not only Baba Galle, you have we as a team. You have helped so many people. We have helped so many people change their lives. So if you want to change your life as well, we
My
are here to
pleasure.
help. Yeah, Mr. Barry, we can hear you. You out. I
Yes,
don't
yes. Sorry, my
know. Go
my
ahead.
line is making in and out. I don't know. I mean, I have a very bad connection today, but we want to also thank you again to Bintaba, for watching and sharing. We appreciate it, and Frankie, thank you for the time.
Of course.
We just want to let people know we are working as a team. Us here and Frankie, we have a lot of. By the way, you was talking about one of our team member who came to get a rent, and they ended up buying a house. Baba Gale is here, he's listening to us. It's the same scenario. Never imagined he would get a house, never thought of it. We came to Frankie, and Frankie shows the money, and I got them the house, got him the house. So, he's a happy homeowner. That was back in 2017, I believe. Since then, now, the other day I was in a hall, I took the mic and make it clear. We created a lot of millionaires in this community,
It's true.
through the help of
Very
Frankie and
true.
our team, yeah, and we really appreciate that. So thank you very much for your time, Frankie. We
Yep, you're
don't have
welcome.
much to ask here. We want to keep the video short so people will take their time and watch it. All right. The only
Yep,
thing
you
we're
got
gonna
it.
do is, yes, we're gonna play. We're gonna show a little bit of our, expertise in the market, and there you go. Yes, so that's a part of our team, and then all the numbers people see running on the blue screen right now is a part of each and every one there is a part of the team. Whoever is contacted there should be able to, help out and give more information. So, Isatu, I'll give you back the mic and let you take it from there.
Okay, I just want to say thank you so much for everyone that is watching us right now. Please share this video, like I always say, and then I'm gonna end up with this saying that if you don't pay your mortgage, you are paying somebody else's mortgage. Regardless, we're gonna pay rent here. We're gonna pay rent or a mortgage. So contact us right now. We can get you qualified. You never know. So I just want to say thank you. See you next week.
Thank you, and hopefully we'll get Frankie soon again to come. I know he left
Frankie's here. Oh, okay, hold on. He's
We
here.
will have him again to come in. There you go. Yeah, so thank you very much, Frankie, for your time. And we're looking to have you soon again to explain this product we have so people.
Mr. Bai, you out again.
We will be back. We will have another meeting for sure.
Okay, not a
All right.
Thank you
Have a
problem.
very
good
much,
one,
Frankie.
everyone.
Have a good day.
Okay, bye bye.
Bye.
All right. Yeah. All right. Yeah.